2022 was a period of intense global inflationary pressures, with countries experiencing multi-decade highs. Prices accelerated on the back of supply constraints brought on by the Russia-Ukraine war. This then resulted in major central banks reacting by raising interest rates. And while inflation is broadly said to be coming down, nations are not fully out of the woods yet.
Although headline inflation is coming down, core inflation is still persistently sticky, as we can see from the chart on the left. And the professional forecasters expect inflation to be fully back at targets only by 2026.
With headline inflation levels coming down from last year's highs, central banks are under pressure to slow down on interest rate hikes or halt them altogether. While market players have accepted that there'll be a higher interest rate scenario for longer period than previously anticipated, speculative talk suggests interest rate cuts as early as the second quarter of 2024. Perhaps when central banks do start cutting rates, this will also affect businesses, workers and households' perceptions on where they see inflation.
If inflation expectations are very important for inflation, then also policy that decrease inflation expectation could accelerate the decrease in inflation with less cost of output.
Central banks have been keen to arrest higher inflation trends, as ultimately this results in the erosion of the value of the money in people's pockets. But in so doing, a constant concern has been that in the pushing for higher interest rates, they mustn't be driven to the extent where they hobble economies so much that they go into recessions. The IMF global growth forecasts for the fourth quarter of this year, including for South Africa, are set to be released next week on Tuesday, the 10th of October. Nompumelelo Siziba, SABC News, Johannesburg.